Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. In Europe, we're joined by our equities reporter, Joe Easton, for more. Joe, we're going to start with European banks today. How are they? Should we be banking on banks?
We should be banking on banks. Very, very, very good one. Trying to think where I can go with that pun. I think I'll probably have to come back on that one. But the Stoxx 100 Banks Index surging 25% year to date. That is the best 3 months since 2020. So since pre-pandemic days. Now, this is kind of twofold in terms of the reasons. So the macroeconomic outlook improving slightly given hopes around a potential ceasefire in Ukraine. That's been a key driver, so potentially a better outlook for loans. And then also where we've had this big spending announcement, particularly from Germany and a couple of other the governments, but mainly in Germany, that's actually pushed up the price of government debt, and that feeds through into the money that banks have hedged in all of their fixed income holdings, and therefore they are going to see a big tailwind from that, increasing yields playing into their profit and loss accounts, and also at the same time probably a bit better in terms of the loan outlook and potentially the home market as well. So it's a double boost for the sector, and banks really the place to be. However, a little bit lower today given that it is quarter end and people booking a few profits. It will be the last day of the quarter on Monday, so we're actually seeing the best performing sectors declining, like banks, defence, etc. But broadly, it has been a good start to the year for that sector.
Yeah, Bank of America's latest survey, did point to investors increasing their exposure to European banks. Now, European car giants, though, have been stung, of course, by Trump's auto tariffs, 25% import tariff. But Barclays says that it still expects the prancing horse, i.e. Ferrari, to gallop to more gains.
Galloping to more, yeah.
It's only one bit of good news in the European auto space, though, isn't it?
Yeah. No, it's not been a great time for autos, has it at all? With getting the news, of course, from Trump that they're going to do 25% tariffs on autos, and that has really hit the entire sector. But Ferrari, given its premium offering and really unique market in terms of its clientele, that is seen as essentially a safe haven. So today we've got analysts at Barclays and also Kepler Cheuvreux both upgrading their ratings on the stock to buy, both saying exactly that in terms of it being a bit of a haven trader. We actually saw Ferrari yesterday come out and reiterate their financial guidance, and that was seen as a really re-emphasising the fact that this company is kind of immune to the downturn, because when the average pocket is being squeezed, people buying Ferraris probably aren't as hurt as the rest of the population. It's the general thesis, and therefore Ferrari outperforming, stock up another 3% this morning.
Okay, well, it is Friday. Neither of us are dressed particularly casually, though, Joe. I mean, you're in a full suit, so you're definitely not picking up on the
I did take my tie off, so I'm slumming
exactly.
it slightly.
That's the sort of respect we expect in this studio, Joe.
Absolutely.
We're thinking about athleisure, clothing, stocks. We had the disappointing numbers out of Lululemon. Looking at the pre-market numbers for Lululemon this morning, down 11.9% in the US. But what's the European knock-on of that?
Yeah, so we've seen a bit of weakness in shares of Adidas and Puma, both of those stocks dropping around 2% in early trading in Europe. So, of course, Lulu being a big company in the US, but also the rest of the world, and both those firms do have massive US exposure. So, as a reminder, Lulu last night coming out and saying that sales will only reach about $11 billion for the year. Sounds like quite a lot, but actually that's a lot lower than Wall Street had actually said. And they've also warned that a lot of their shops are seeing fewer numbers in terms of footfall, particularly in America, and they say that's a key indicator of where their sales are going. Therefore, the stock absolutely hammered in the European pre-market, as you mentioned there, Stephen, and seeing a feed through into the European names Puma and Adidas, notably weaker given the softness coming over from Lulu overnight.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.